For years, Bitcoin has been promoted as a safe haven against inflation, often compared to gold and dubbed digital gold. Many investors and companies believe that holding Bitcoin would protect their wealth during economic uncertainty. However, recent market data is challenging this narrative. The business model behind Bitcoin is evolving, and the idea that it offers stability is being questioned. As we dig deeper, it becomes clear that the reality of Bitcoin's role in corporate finance is far more complex than the simple safe haven story we've been told. Let's explore how this shift is impacting both investors and major companies. Companies like Strategy Inc., as an example, they don't just buy and hold Bitcoin. Instead, they use a leveraged treasury model. They purchase Bitcoin, which boosts their stock price. Then, using that higher valuation, they borrow more money to buy even more Bitcoin. This creates a feedback loop that works well when the market is rising. But when the market turns red, the risks become apparent. The entire strategy hinges on Bitcoin's price staying high. If it drops, the company's borrowing power evaporates, exposing them to massive losses. This approach is far riskier than the traditional image of a stable, gold-like asset. Recent MarketWatch report highlights how the myth of Bitcoin as a safe haven is breaking down. During the latest wave of economic uncertainty, gold, long considered the original safe haven, actually rallied. In contrast, Bitcoin's price fell sharply. This divergence shows that institutional investors are treating Bitcoin more like a risky tech stock than a stable currency. For companies with large Bitcoin holdings, this is a huge problem. When Bitcoin's value drops, their ability to borrow disappears, and losses can be staggering. For example, Strategy Inc. recently reported a $12 billion loss in just one quarter, revealing a fundamental flaw in the Bitcoin treasury strategy. What's the real takeaway? If a company's only product is a volatile asset like Bitcoin, it isn't operating like a traditional business. Instead, it's functioning more like a hedge fund, taking on high risk for the chance of high reward. This distinction is crucial for investors and anyone interested in how major companies manage their finances. The recent losses in market behavior show that the Bitcoin as a treasury asset strategy is fundamentally flawed. As the landscape continues to evolve, understanding these business models is more important than ever for making informed decisions about where to invest and what to expect from so-called safe havens.